Well, today I'm joined with Brien Lundin, the CEO of Jefferson Capital. He is the president and CEO of the long-running Gold newsletter, as well as the longest-running investment conference in the United States, the New Orleans Investment Conference. Brien, I think you're a pillar of this community, so thank you so much for joining me here today.
Well, let's hope there's some stronger pillars out there supporting the mining community.
Oh,
I may be that weak spot in the facade then, but thank you for that.
well, I think your name and reputation precedes you. You have helped out a lot of companies over the years with getting the message out there, and coming from trade shows myself, I know how valuable that role is within the industry. So it means a lot. And I kind of want to start there. I want to go back a little bit and uncover the history. You know, as we said, the New Orleans conference is the longest running investment conference in the United States, started by Jim Blanchard. I understand you
Yeah.
took it over from him. So can you walk us through, some of those early days of you getting involved with that conference, getting involved with the newsletter? It was a different
Yeah.
landscape back then. What was it like?
Yeah, it was a crazy world. Of course, today's world is crazy as well, but I see a lot of parallels. So I do think it's instructive to look at the past and the origins of everything we're talking about today, at least in the metals and mining industry. And a lot of that goes back to Jim Blanchard, who started everything that I do today. Jim was a school teacher and a gold bug and a libertarian in the early 70s, and he heard Nixon um, temporarily suspend the dollar's connection to gold on August 15th, 1971. And he knew that that was going to bring in a real inflationary spiral, and take away one of the last restrictions on spending and deficit spending, and the depreciation of the dollar. So at the time, it was actually illegal for American citizens to own gold, which sounds ridiculous today, but government wanted to save us from ourselves, as it were, back then. So it was illegal. And it was really just patently ridiculous. So Jim started a newsletter called Gold Newsletter, which in those days was something that's just run off a mimeograph and talking about the efforts to lobby to return the right of gold ownership. And he did a lot of crazy stuff advocating for that right, and was eventually successful in 1974. So he had a conference to teach Americans how to invest in gold. And those two things he started, Gold Newsletter in 1971 and his conferences in 1974, I'm still running today. So they have a very long legacy. I like to say that Gold Newsletter is the oldest, longest running precious metals advisory in the world today, but I don't even know if there's a longer or an older newsletter, investment newsletter out there being published. And the same for the New Orleans Investment Conference. I don't know if there's another investment conference in the world today that's older than that event, than our event. And we're celebrating our 50th anniversary this year. So it's a legacy that I've had for. I'm proud to continue, and we just try to burnish the legacy that Jim started, and keep true to those traditions of educating investors about free markets, free minds, sound money, and the like, all kind of coming back into vogue right now. And my history started in 1985. Jim had already had things going for about 14 years or so, and I started off as a junior copywriter. Became great friends with Jim because we had a lot in common and kind of both shared a libertarian mindset. And by the 1990s, or actually, he sold his coin and bullion company in 1988, and then bought it back a couple of years later from a hedge fund, and sold the coin and bullion company, but then kept the conferences and the newsletters and started a new company with me. And I was working or running that for about 9 or 10 years when he passed away in 1999. And so I bought the remaining majority interest of that from his estate and have been running it ever since.
Wow, quite the story. And you were mentioning, Jim sounded like quite the character as well. That
Yeah.
the infamous play that I was reading about was flying a plane over Nixon's second inauguration with the sign that says legalize gold, which
Yeah.
would probably be a tough thing
Yeah,
to
they
get
would have
away with
sent
today.
him to send him to Guantanamo Bay today if he would have done that. And he also held a number of press conferences around the country with a 2-ounce bar of gold that he had smuggled in from Canada, which at the time was freer than the US in terms of gold, at least. And invited the Treasury and ATF to come arrest him, which they unfortunately never obliged. But yeah, he did a lot of crazy stuff. And even after legalization, he did a lot of things to try and bring free market literature behind the iron and bamboo curtains into, you know, the Soviet sphere and the communist Chinese sphere, and try and promote free market education. And really just, he's an incredibly charismatic individual. He was confined to a wheelchair since he was 17 years old and never let it get him down. He went to the North Pole, traveled around the world, from Africa to the Great Wall of China. Just an incredible individual, and accomplished a lot in his relatively short lifespan.
That's amazing. And I can only imagine how valuable that sort of mentor relationship would have been for
Really
you in your
was.
career. So where were you at in life when you kind of discovered gold and you're like, this is such an important concept that I need to learn everything I can about this or dive into this in the way that you have with your career?
Well, I had no background in gold, you know, as a commodity asset, money, philosophically, or anything until I started working for Jim. So you
Okay.
can imagine the crash course I underwent. You know, I had kind of a natural libertarian philosophy, some authors that I liked that Jim liked as well really helped cement our friendship.
Mm.
But one of the things I would do was read all of the hard money newsletters that were being put out back then by people like Larry Abraham,
Was
uh,
Jim
um,
Dines as early as then?
Jim Dines. Jim actually was a good friend of mine.
Hmm.
Uh, just Don Hoppy, and long list of people. You know, names fail me now, but there were probably 30 or 40 newsletters of the day out there. And today, I think there's a direct parallel to today, as I mentioned, because that was a real underground media back then. They were kind of bypassing traditional media, and talking directly to subscribers and some brilliant, insightful writers at the time, trying to explain the unusual circumstances we were going through. And today we have that again, I feel, but it's mostly through, or it is through social media, like X/Twitter, now Substack. A lot of the people who are publishing or still publishing on X
Hmm.
are publishing on Substack now. So it's there in a different way. And I think extraordinary times kind of call for extraordinary people to rise up and explain them.
Yeah.
And that's what we're seeing right now. There's just some, as you know, brilliant minds out there. And that's what I've been trying to tap into and get a lot of them to come to my conference every year, and been fairly successful in doing so. Um, and I just think it's harkens back to the 70s and 80s, and you know, it really rhymes with that period.
Absolutely. Well, we're going through, I think people learn about inflation, they wonder why everything is going up in their lives, and then they start learning about money. And I think that there's a
Hmm.
big generation who maybe, especially within the junior mining space, exposed to high risk, high reward through cryptos, and are now, finding, okay, let's find an asset that's actually backed by something real. And hopefully it kind of leads them in this direction. So we're talking about history rhyming, not repeating, and
Yeah.
and you've had a long career, 40 years. How has your philosophy towards gold, your approach towards investing, both in, I guess, like from a wealth management standpoint of just the hard asset, and then also maybe a change in philosophy towards the junior miners over those decades? I know it's a larger
Yeah,
question.
it's it, good question. And you know, we should analyze our history, see where we are in history, and try and be objective, look at the broad uh, um, span of our experiences and what's happening now, and how it does rhyme with the past, but every period is different to some extent. And, you know, looking at gold philosophically, I think over the years, I've come to appreciate the importance of looking at gold from a gold-centric perspective from the world of finance, that the gold price doesn't fluctuate. Other prices fluctuate against gold. And if you look at it from that standpoint, you try not to look at the daily fluctuations in the price based on the dollar, although I still do it. I still get stuck in that emotional trap and in a bad mood on a day when gold's losing $30, you know, in a good mood when gold's up 30 or 40.
Yeah.
But you need to divorce yourself from that and look at the fact that gold is the standard and everything else revolves around it. And part of that is why I tell people, and in recent years, I'm trying to educate a lot of new people to the sector about gold. And I try to instill that understanding in them, but also tell them that there's two reasons to buy gold. And one is insurance, insuring your wealth against something you know is going to happen, which is a depreciation of the dollar or whatever your home currency is. And the other being as an investment when you think the macro picture argues for a catch-up period in gold versus other assets. And I think right now it's arguing for that. And that's where the current environment really does rhyme a bit with the 1970s. You know, in 1971, the central bankers all of a sudden lost all of their restrictions from unrestrained deficit spending. And that was really kind of a relief of a pressure valve from the deficit spending that had started in the 1960s. And, you know, I liken it to P.G. O'Rourke's old saying that, you know, it's like giving a bottle of Jack Daniels and the keys to the car to a teenager. When all of a sudden the central bankers were let loose in the 1970s, they ran the car immediately into the ditch, which was that inflationary period we had. Since then, I had a period where it looked like the central bankers had it figured out. But if you look at the long trend of interest rates, you see that we've had a period of ever easier money, and that the bottoms in the Fed funds rate, for example, is constant stair step down to zero. And then in 2008, quantitative easing. And then with COVID, everything we did in 2008 multiplied manyfold. That it's a trend of ever easier money, ever more dramatic monetary policy in reaction to the crises that this management of monetary policy creates. So we're in kind of the end game of that. And I think in a very real way, we're kind of returning back to the 70s, where we see the repercussions are starting to come due. And for a number of reasons, it's been delayed for a few decades, but it's coming to a head right now.
Yeah, the kicking the can seems to be a longer road than some of us anticipated.
Yeah.
And
you still have a ways to go too, you know, but regardless, you're going to want to own gold because things are only going to start to accelerate from now on.
yeah, I think that was the biggest lesson just in my short career so far that I had to learn, was when I was learning about a lot of this stuff early on, I kind of thought, oh, it's going to happen quite quickly, and the pendulum's
Yeah.
going to shift quite fast. But realizing that it is long, and it does take time to create these transitions. But then, as I was having a conversation with Robert Sin from Goldfinger, it gets to a point where it ramps, and you want to be there before the ramp. So, the landscape for the younger generation has changed. I think you actually put out a retweet the other day that was saying, cost of, or is the annual income versus the cost of a house. And it was about 2 times your annual income. Used to be sort of back in the 70s, what the price of a home would be. Now we're at sort of a 7 times factor from your annual income to the cost of a home. In Vancouver, it's even crazier. Average income $60,000, average price of a home is close to $1 million. So the strategy in the game is changing. Obviously, there's some tried and true things, like you're saying, like, start with gold, protect against that, hedge against that inflation. What else do kind of that younger generation need to be doing to really kind of integrate into the current economic landscape with how inflation has gone and just the overall sectors?
I think it's a recognition that 40 plus years of ever easier money means that interest rates are always getting lower. Obviously, there are other efforts to get that monetary adrenaline into the economy, other programs as well, when things get desperate. But the big trend is toward greater depreciation of purchasing power of currencies. And it's not just the US dollar, it's a global thing. It's a developed economies and emerging economies that, it's really human nature. And what's happened now is that those many years of ever easier money have encouraged ever greater debt creation and ever greater accumulated debts. And it's happened across the world. And because of that, currencies are in a broad trend of losing their purchasing power, and they're all racing to the bottom of the hill. At some point, some are further ahead of the others, but they're all headed in the same direction. And to hedge against that, you need to own, the monetary metals, gold and silver, but also real things, income producing real estate, tangible assets, the era of commodities versus the era of financial assets. So I think that shift is happening right now, and you just have to recognize that trend of a depreciation of currencies. And again, the rate changes. You don't know how much it's going to change, but you know that, for instance, U.S. dollar in 3 to 5 to 7 years is going to be worth a whole lot less in terms of purchasing power than it is today. And over broad sweeps of time, gold hedges very well against that. And that's what you need to do. You need to protect some of your wealth in those metals, but also invest to try and build wealth by recognizing that macro trend and trying to leverage it.
So, I mean, you're based in the United States, which is, there's predictions about where it's going to go. You're still choosing to live there. What's your level of optimism for the U.S. to, I guess, remain the world reserve currency over the coming decades, or remain this, economic powerhouse, military powerhouse, in its position as the global superpower?
Yeah, I'm a bit different than a lot of my friends in the hard money industry, that I'm fairly bullish on the US, more in a relative sense than anything else. I recognize the problems, I recognize the deterioration of personal liberty, and the like, and militarily, and its stance in the world, both as the global reserve currency and the the major superpower, are all being eaten away at over time. But I think that you have to look at it again from a relative standpoint. Where is there better rule of law? I mean, we could talk all day about all of the deficiencies in the
Hmm.
US rule of law, but it's still the best out there. I don't think that we would have had a situation in the US where bank accounts of protesters would have been closed by the government. I don't think we've reached that point yet. I think we're progressing toward that, but we're not quite there yet.
Yeah.
So if you look at, our competitors in terms of geopolitical might out there, a lot of people turn to look at Russia and China and BRICS. But does anybody want to trust their wealth and everything they've worked for in their life to what Putin or Xi is going to do, with no recourse to law at all?
Hmm.
And again, recognizing there's plenty to criticize about the U.S. You have political opponents that are being prosecuted for things that no one else would have been, ever has been. And so it's not in the best place. But
Hmm.
again, it's better, I think. So I recognize that trend away from the U.S. as global reserve currency, but I think the timeline for that is far longer than anything we need to worry about, far longer than my lifespan and
Hmm.
even yours. And it's going to be a long time coming. Rome, we talk about the parallel with Rome and the collapse of Rome, and it's trite, but it's absolutely apt. And you can see a lot of the same things going on. But it took Rome a couple hundred years to collapse.
Yeah.
And it's a longer process than I think many believe.
Yeah, absolutely. And that's the thing. I have changed from the first time I listened to Doug Casey when I was 15 years old, saying it's right around the corner to where we are today. And I
I
really
had a
noticed.
I had a conversation with Doug on one of my podcasts where I said, Doug, I saw that clip from the old Donahue show.
Yeah, yeah,
And I said it was you saying, you're just a younger version of Doug saying exactly the same things that you're saying now about the collapse of Western civilization being imminent. And Doug being Doug said, yeah, Brian, that's true, but I really believe it's time now. And just,
yeah.
it does take longer, and I do think it's going to take so long that it doesn't really matter to us right now.
And I think I've really come to appreciate the resilience of the mental capital that exists within the United States. There's so many problem solvers trying
Yeah.
to continue fighting its way, and because it's spent, the last 100 years attracting some of the best minds from around the world, who are there still innovating. And I think we were speaking about the downfall of Rome and how sort of colonies traditionally became, unprofitable, and which caused to a lot of retreat. I was in Africa last year, and the thing I noticed was that it's almost the digital colony now for the United States, where China's kind of gone more infrastructure focused.
Mhm.
The US has gone, it's Airbnb, it's Uber, it's all of these different suite of tech giants, Google, that have infiltrated and are generating revenue for the United States and in all these countries around the world, which was sort of insightful to kind of see how there's still that, um, I guess I don't know if you want to call them the modern colonization, but they're the infrastructure that's a lot cheaper to maintain, um, for the US to continue its influence in that way.
Yeah, and it's the export of the culture as well, for better or worse. But it
100%.
is interesting what China is doing in Africa. It is a new, colonial period for China, where they're
Mm.
leveraging getting their capital out of China, building infrastructure to gain access to commodities. But
Yep.
it comes at a cost that obviously a lot of countries have not yet appreciated.
No, and they're from my understanding too, they're struggling to maintain commitments. I know they were supposed to build a pipeline through there's a through Uganda into Tanzania to come into the coast, and they're kind of halting permits on that because of payment issues. So
Mm.
uh, struggles. To kind of jump back to our sector a bit with junior mining resources. What do you think? You're talking about educating people. What do you think takes people from the beginner level to the intermediate level? We talk about, understanding management, understanding sort of the sector, a market cap, share structure, those types of things. But then what's the next layer for people to start unearthing?
Yeah, I tell people all the time that, you can leverage these trends through mining stocks. You can get more leverage through the juniors, but that it
Mhm.
is an inefficient market, which is good because you can outwork other people. You can do your homework. You can subscribe to the best newsletters. You can listen, follow the best people. You can go to the best conferences. You can talk to them. You can put in a lot of time, effort, and yes, some money into learning about the sector, and therefore put yourself in a position to outperform most other people. Or you can simply buy the indices and still do well. So part of that is getting that education, getting to that first level, as you mentioned, of understanding the key factors, of
Mhm.
which there are obviously a bunch of we don't need to go into right now. The next step, I think, is understanding yourself and the emotional roller coaster that you go on investing in this sector. And I am by far not the best out there. I've learned a few lessons over the years that I'm willing to share, but with the full knowledge that have made many mistakes and I'm likely to make many more. Obviously, I will, but many of the same mistakes I'm going to make that I did before because you get emotionally invested in these companies. And on my level, you know the people behind them, and a lot of times they're good friends of mine.
Mhm.
Um, and and so I'm betting on the horses, sometimes to the detriment of my portfolio,
Right.
and I'm selling when I should be selling.
Mhm.
And that's one of the keys is knowing when to sell. I'm a great buyer. A lot of people can be great buyers, but the other half of it, the tough part, is knowing when to sell and how much to sell. And you're never going to play it perfectly, and that's okay.
That's all right. Yeah, you never got to look back, and as my dad said, never argue with a double. Everybody's
Right.
chasing these 10 baggers, but and you have sort of an interesting seat with the conferences and sort of being able to watch the sentiment a little bit more and the crowd. Is there anything, I guess, in terms of like just understanding how an entire crowd can kind of shift and move towards things? And is that something when you see something super popular, are you more interested or are you becoming disinterested in those super well, I guess, are marketed or the hot stories?
Yeah, you know, the hot stories are great if you've already bought them. I tend to, again, to my detriment many times, I don't want to be late into a hot story, but sometimes you need to be. You know,
Hmm.
there are some of the big stories you need to get into regardless because they are going higher. I found the audience at our conference is, you know, because it's a very sophisticated audience, people are paying thousands of dollars to go to the event. You know,
Hmm.
we're in New Orleans, but we might draw only 20 people locally, and we get hundreds and hundreds from around the U.S. and Canada and around the world even, and they're spending, you know, upwards of $1,000 to get in the door uh, at our event, but thousands of dollars to travel to New Orleans, spend 4 or 5 days in a hotel. So they're very highly qualified, very sophisticated, very smart investors.
Hmm.
And I have found that that's probably the best indicator of a bottom in the market. I remember our conference in the fall of 2015. You know, we had gone through 3 years of a bear market and steady decline in the gold price and the mining shares to that point. And we always get down to, we never get below a certain level of attendees, so like 500 or so attendees.
Hmm.
And that's the distilled hardcore metals and mining investors, freedom lovers, et cetera, and sound money advocates and all that come to our event. So we never get below a certain level. In good years, that number increases, but we never get below that hardcore level. And that year, we were down on attendance to that kind of bottom that we reached. And I noticed that our attendees went into our exhibit hall and they were buying, they're enthusiastic. And the bottom of that market, and really the bottom of even the market we're in now, occurred, you know, in December of that year. And
Hmm.
uh, and so they were very smart. And I noticed that last year they were buying again. So that was a good sign to me. And again, it looks like it's proven correct.
Hmm.
So so that's been a great indicator for me. And you know, I think we're going to have another secular bull market like we had in the 2000s that's beginning right now. So it's been somewhat extended already, but I think we've got a long ways to go.
Hmm. Yeah, and you know, I remember using the conference as an indicator. I think it was a January 2012 conference, and it was bursting at the seams with people, and people
Yeah,
were lined up to get in, and the IR guys are all ecstatic, and I just remember sitting there pausing for a moment, going, "Oh my gosh, this is the top," and
yeah.
and then yeah, so you're saying the sophisticated ones aren't waiting till the till the tide's fully turned. They're in there, buying over the low years and being patient. So gold is the brand. You're saying we're starting a secular bull market. What's the short, medium term outlook for yourself?
For my brand or gold or you know,
For gold?
I have a newsletter called Gold Newsletter. You know,
Yeah,
I
exactly. Yeah,
cover
where
all of the assets and everything else, but my professional future and career tends to revolve around gold. I have, you
Mhm.
know, the oldest kind of gold-oriented conference in the world today. So, yeah, that it better or worse, you know, I'm riding that roller coaster in a very real way.
Mhm.
Um, and you know, the short term for this market we're involved in has always been, and more so now than ever, has been the hardest to predict. You know, we don't know what's going to happen in, you know, tomorrow or a week or whatever. But if you look down the road a couple of years, it's hard to imagine that gold's not going to be much higher and these mining stocks aren't going to be a lot higher because at that point, the Fed would have gone back to the cutting side of the cycle. And you know, has gained over $400 from the harshest uh, rate hike cycle ever seen. So it should do much better during the rate cutting cycle.
Mhm. And then with regards to the minors and the juniors, are there any specific companies you're looking at? Any ones you want to share? Or they got to pay for the newsletter?
You know, yeah, I'm not a thematic type investor. I don't, try and get a macro theme and then drill down and find all the companies in it. I look at each story individually.
Mm,
That said, I think right now the companies that have big resources, and I think that's being proven, they're the first movers. They have been the first movers over the last couple of months. The companies that have identified resources that are significant, that are trading for, say, one quarter to even a fifth of where they would be in a normalized market, much less a really excited market. Those are the companies that you kind of want to look at right now. That said, I can't avoid or resist a good exploration story. I'm a sucker for a good exploration story. And our relatively recent experience of Great Bear was kind of um, um, the perfect story for that, and the perfect example of the kind of excitement you can get from a big discovery when everybody does it right.
yeah. Yeah. Well, that was, the biggest story of last year. Uh, well, I could probably talk to you for another hour on some more of the history because I love that stuff. But thank you for sharing your origin, where you're at today, some other insights. It means a lot. It's very valuable. So personally, thank you, and the audience as well.
Well, I appreciate the opportunity. It reminds me of how long I've been in this industry, and is as if waking up in the morning and looking in the mirror doesn't remind me enough. That does as well. So, but I appreciate it. It's a long history that I've been fortunate to be a part of, and a lot of brilliant people that have traveled that path.
Hmm.
Um, and I think there's uh, fortunately and gratefully so, there are a lot of people coming to the sector now for the right reasons, and they want to maintain their independence and their freedom from government manipulation and destruction of the currencies.
Absolutely.
And knowing that history, I think, can really help them out a lot.
For sure. It's an incredibly unique perspective for your world outlook that is incredibly freeing when you can wrap your head around it. So it's a good seat to be in. But thanks again, Brian, and we'll have to do it again.
I look forward to it, Jeremy. Thank you so much for the opportunity.